Here is what I am seeing on step index 100 this week. The market just tapped into the major supply zone and is currently showing a signs of reversal. So this is the supply zone. Step index has been in a clear downtrend since 16 May 2025. It has been making a series of lower high and lower low. This is high, this is low, this is lower high, this is lower low, this is lower high, this is lower low, this is lower high. So I am expecting the market to come and make a new lower low. So this is a clear downtrend market because the market has been making a series of lower high and lower low. So I'm expecting this market to come and make a new lower low. But currently the market is reacting to this supply zone. The market is reacting to this supply zone. If you look at that supply zone clearly, we see that there's an imbalance there. An imbalance is just an inefficiency in the market. And the price is yet to tap that imbalance. The price is yet to tap that imbalance. So I will be expecting the market to come and tap that imbalance before I start looking for my sell opportunity. So I'll be looking for something like this. Market tap into that imbalance, then start selling. So I will position myself to enter sell at this area. I will position myself to enter the market at this area. But I will not just enter the market when the price comes to that imbalance. I will wait for break of structure on lower time frame. I will wait for break of structure on lower time frame before I enter the sell. Before I enter the sell, I wait for break of structure. I'm saying it again so that because some people can just enter the market immediately the price come to that imbalance. No, wait for break of structure on lower time frame. What do I mean by break of structure on lower time frame? You will be waiting to see something like this on lower time frame, maybe 1 minute or 5 minutes, assuming the market is making a series of higher high and higher low, higher high and higher low. Then suddenly you see something like this, change of character. So that is when you will now look for an opportunity to enter the market. So you will enter the market at this area because a change of character has happened, which means that this particular trend, the current trend, is about to change. This current trend is about to change. That is why this happened. That is why the change of character happened. So you'll be looking for this thing on lower time frame inside this place. Then after seeing it, you now enter the market. You enter a sell. You enter with your what? You enter a sell order when you see change of character on lower time frame inside this zone. So you now enter sell. So let me demonstrate it for you so that you can understand it better. So assuming that a change of character happened here, so you wait for the market to retrace back here, then you enter your sell position. Then you put your stop loss at above this high. You put your stop loss above it in case the market does not go your way because you cannot control the market 100%. You can't control the market. So that's why you use your stop loss because you don't know what will happen next. So you use your stop loss, then you enter the market here. So that is what you now do here. So you wait for break of structure on lower time frame before you enter a sell order. So this is daily time frame. So you can go to 4 hours time frame to see what the market is currently doing. As you can see, the market is reacting to this smart money cube. This is smart money cube. If you don't know what smart money cube, you need to check our videos. I think we have made videos on that. You can check it out. So we explain what smart money cube is. That is what the market is reacting to here. That is what the market is reacting to at this area. But there is high probability that the market we go up to feed this imbalance because there is imbalance here on daily time frame. So that is why your top down analysis is very, very important. You need to do your top down analysis. Assuming that you are not doing your analysis on daily time frame, you wouldn't have seen this an imbalance there. So there's an imbalance on daily time frame. So there's high probability that the market might go and feed that imbalance before coming down to make this new lower low. Because this is a downtrending market, we're expecting the market to come and make a new lower low. So, but before that happens, we are expecting the market to feed this imbalance first before coming down here. I hope you are getting me. So we are expecting the market to move a little bit up, feed this imbalance, then start coming down. So when do we enter the market? We enter the market inside this supply zone. We put our stop loss here, but we don't just enter the market. We wait for break of structure on lower time frame before we enter the market inside this zone. We wait for break of structure, and this is the break of structure. That is what I explained here. You wait for this thing to happen inside this zone, then you now enter your sell order. You enter your sell order. and you put your stop loss above this previous lower high, that is where your stop loss will be. Then you enter here, you only enter here after you have seen a break of structure on lower time frame. That's when you enter. If you don't see a break of structure on lower time frame, don't bother to enter the sell. Don't bother to enter the sell. If you don't see a break of structure on lower time frame, don't bother to enter. But if you see a break of structure on lower time frame, enter the sell, put your stop loss above this previous lower high and target this previous lower low for your take profit. So that is my bias on step index 100 this week. I'm looking for a sell opportunity on step index 100. What is your own bias on step index 100? Let me know in the comment section. Is it a buy or sell? Let me know in the comment section. If you find this video helpful, like and share and subscribe to our channel for more analysis like this. See you at the top. See you next time. Lifted. This is Tradexbis.